Good afternoon, traders, and welcome to today's vlog. We're going to do things a little bit differently today. Rather than me kind of talking at you and stuff like that, Nikki's going to get involved today, and we're going to have a little bit of a discussion and a debate about day trading. Okay, so there's been a lot of questions coming in and stuff, so yeah, let's see how this goes.
Okay, well, today what we're going to do, we're just going to go through some of the questions that you've asked by email, but at the same time, we're going to have just a bit of a chit chat about day trading. I think most of you know that Alex is the day trader out of us, and I rarely get involved in the market on an intraday basis. So today we'll find out why, and find out why he likes to do that and why I don't, I guess. So let's kick things off.
Fire away.
Okay, the first question is, well, to get things started, why do you like day trading?
So I think that's a really simple one. You guys have heard me talk about this many times before. First of all, I think I almost have ADHD or something, because I can't spend too much time sort of focusing on one particular thing. I like the fact that it's very fast and furious. I like the fact that obviously you can make money, you can be out of the market at the end of every single day. So you're not carrying things over the long run. And I've got better over time, but I've got this issue where I can't hold trades for 2-3 weeks without trying to interfere with it, or say, oh, actually maybe it's not going in the direction I want it to go in, so maybe I should move the stop up, or I should come out of the trade and then get back into the trade again. And then inevitably you come out of the trade and you don't ever get back into it, and then you miss the move. So longer term trading, I just find that I make more mistakes generally. In shorter term trading, I can be in and out of the market. It's sort of like short, sharp trades. Yeah.
Do you when you're taking your day trading positions, do you not think I'm actually leaving some on the table by not making the most of the longer term moves? Because obviously as an intraday trader, you're taking your profits off the table at the end of the day, or loss. But a lot of the moves in the FX market are longer term, fundamentally driven.
Yeah.
So you are sometimes leaving some on the table.
Yeah, definitely. I mean, you do feel like that when you see a move sort of go with you and you're not in that move anymore. But you got to look at the other side of the coin. I'm one of those people that I get much more frustrated with being in a trade that wasn't in profit and then goes against you. That's more frustrating for me than being in a trade, taking profit, and then seeing the trade go off in your direction. Because at the end of the day, my account is still up. I'm still making money. Whereas if you're in a trade and you try and hold it for that big move, it can then turn around, and that's something that causes me to then go into self-destruct mode, and I start making stupid
basically
decisions.
The opposite of what I do.
Yeah.
Essentially.
Yeah, but I mean, that's not to say that all day traders are the same. We've got one guy in our community, if you like. You've probably seen his post before. Mr. Well, I won't mention his name. I'm not sure if he wants me to mention his name, but he holds trades for, he'll sort of like set and forget. He'll hold it for the whole day, and he'll be in those swings where the market's going with him, going against him, going with him, going against him. But he kind of gets the bigger moves by doing that.
Oh, so he gets in early, right in the beginning of the day, and has a directional bias and lets it run its course. Yeah,
and he kind of like has a profit target, and he will trade to that profit target, and he does very, very well. I personally, I'm trying to do a bit more of that because, I guess it is more profitable if you can trade it well, but I haven't really mastered that yet.
Fair enough. Okay, this second topic. The old argument about technical versus fundamentals. Where do you stand on this point? Coming from a day trading perspective, because I know you have an involvement in our longer term portfolio.
Yeah.
But as a day trader, what is your view on fundamentals versus technicals?
Well, most of our trading is technically based. So when I'm day trading, it's all based on the charts. All of the entries and the exits, they're based on support and resistance levels. And really fundamentally, none of the trades are triggered fundamentally as such. Having said that, if you do have a fundamental bias, if you know that there's a big meeting out in the day, so for example, you've got an interest rate announcement, and then you start to see the markets move as a result of that announcement, it sometimes can give you the confidence to really sort of, get bigger in your trades and make a lot more money.
So would you say you have a view on that announcement and position size accordingly, or are you saying the reaction after the event?
I think you have to have a view to be able to trade the event. So the reaction to the event can be very, very short-lived, as you know. You get non-farm payroll numbers come out and it's really, really positive, and then you get in and you start, buying the dollar, for example. Then the revision comes out, and last month was really, really negative. And then
the market goes against you. Up, down, then at the end of the day, it's the same place.
Yeah, exactly. Yeah. So if you don't have a bias and you didn't understand or you didn't have some sort of expectation, then you would have been chopped about, trading the news like that, trading economic announcements. But if you understand it and it comes out, along with your bias, or you understand what that announcement means, and you can kind of trade in that direction according to, what the results were.
Fair enough. Makes sense. And the second question. Okay, yeah. With my trading, I like to run winners. I try and sit in a position for as long as possible, and I add to them when they go into the money. This is obviously easier said than done, but from a day trading perspective, you're taking little bites of the cherry and often.
Yeah.
Right? Do you think you can manage both a longer term play in terms of having that mindset and combining it with a day trading mindset as well?
You can. I reckon you need two accounts. I don't think technically, I don't think you can do it in one account anymore, because there's a sort of first in, first out sort of rule that came in a few years ago, where the first trading. So if you were to go long pound dollar, for example, you then couldn't go short pound dollar in the same account because one would just close the other out.
Yeah.
So from a technical perspective, it's difficult. From a practical perspective, if you have different accounts and you are, and you do want to run a longer term portfolio and shorter term portfolio, yes, you can do it. In some cases, it's actually quite positive, because you can have the shorter term moves offsetting some of the losses of your longer term portfolios. All right.
Mm-hmm.
And ultimately, if a market is going in let's say you're short the DAX, for example, on a longer term trade, and then you get a shorter term trade to short the DAX, I wouldn't necessarily always go into those trades, because you're in the same trade.
Increasing your risk in the same direction.
Yeah, exactly. But I don't have a problem trading against a portfolio at all, and the fact that you trade the longer term portfolio primarily makes it easier.
Okay, fair enough. Okay, so here's a good question. Okay, you're very obviously active and intense and focused when you're sat in front of your screen, and you only day trade for 2 hours a day. Is this the reason you only trade for 2 hours a day?
Yeah, so there's a number of reasons that I only trade for 2 hours a day. First of all, with day trading, there are benefits psychologically, and there are also drawbacks. One of the drawbacks is that one of the benefits is that you're taking lots of trades so you can make up for mistakes very, very quickly, right? One of the drawbacks is that you're taking lots of trades so you can compound mistakes very, very quickly. So what I sort of tend to find is, if I'm trading the entire day and I'm focused for 8 hours a day, one, I won't be focused for 8 hours a day, so I will make mistakes. But two, on those days that you have where you make a mistake, okay, and you're not in the right frame of mind, so you make one mistake and then you make another mistake, and then that compounds on the previous one, and then you end up making loads and loads of mistakes. And if you've got 8 hours to do that, you can absolutely destroy your account.
Yeah.
Whereas doing it in just sort of like a 2 hour window, there's only so much damage you can do if you get into that negative mindset, and we all do it. We all, regardless of whether you've been trading 20 years, 30 years, or 1 year, everybody at some point in time is going to get into that mindset where they make the wrong trades, they make the wrong decisions.
So the emotional and the psychological aspect, you think it's more important when you're trading from a short-term perspective, because you have the risk of compounding mistake after mistake after mistake.
Yeah. So that's one of the drawbacks psychologically. There are benefits psychologically as well, because the same reason that there's a drawback is the same reason that it's also a benefit, if you can control yourself.
Okay, makes sense.
And plus, obviously, doing other things as well. So if you're trading for just a couple of hours a day, then you can do other things in the afternoon, whether that be run other businesses, play golf, do whatever it is that you want.
Yeah.
But you're kind of not swapping, one desk for another, so to speak. You're not chained there for
generally,
8 hours a day.
you take risks, so you take on positions between 8 and 10 in UK time. Like, why is it 8 and 10? Do you do prep before that, or is it just specifically the volatility in the market kicks in around the European Open? What is it?
So it's a combination of all of that. Yes, we prep before that. There is a lot more volatility in the markets, but also it works for me from a work-life balance perspective. You know, if I get everything done from 8 to 10, I then have time the rest of the day to do whatever I want to do. And it may be that sometimes I keep the screens on and I continue to trade throughout the day. You know, that's not
Yeah.
uncommon. But it just, I don't. When you're day trading, you have to have a routine. Okay, you have to do things, you know, the same every single day. Otherwise, you start to screw up and you start to make mistakes. So by
Okay.
having that routine of the 2 hours,
Yeah.
you know, it kind of keeps me in check. But that doesn't mean that if after those 2 hours I'm in a good place and, you know, I'm sat by the screen, I won't continue to trade throughout the day.
So it's kind of slightly different to how we'd go about running our portfolio, in the sense that the portfolio is, the work has to be done, but it doesn't matter when it's done as such, as long as your analysis is done, it gives you the trade idea.
Yeah,
Whereas you have to be specific.
to a time. Yeah, whether that be trading the US markets in the evening
Yeah.
or the European markets in the morning, it has to be the same time every day,
Okay.
from my perspective.
Okay. Okay. Yeah. Okay. We allocate 20% of our funds towards our day trading
Hmm.
and 80% towards our longer term portfolio, which consists of equities, FX, and some commodity plays. Do you think the fact that we only allocate 20% towards the higher intensity and higher risk day trading helps you when it comes to?
Yeah, absolutely. I mean, it's the more money that you trade and the more of your total capital, if you like, that you have on the table when you're trading, obviously psychologically it's going to have a bigger impact. So absolutely, the fact that we only have a smaller proportion of our funds allocated to day trading does take, you know, some of the psychological edge off of it, if you like. It allows me to be more risky, take more risk, because I know that if I destroy the whole thing, that's not game over.
Yeah, that helps me as well. um, okay, what do you trade on an intraday basis? Obviously, you like the DAX because it's volatile and you kind of know it intimately. But
Yeah.
do you trade anything else on an intraday basis?
Yeah, I mean, we've got the FX charts up all the time, some commodities, and that's kind of it. I mean, I'm not prejudiced against profit. If something's moving, you know, I'm not going to discriminate against it. I will take the profits wherever they are. But generally speaking, the DAX is my primary tool, the primary instrument that I trade. Obviously, I like FX, and then also any commodities.
Okay. Um, Here's an interesting one. Have you got in mind a favourite day trade you've taken? I mean, I've got a few longer term plays that stick out to me, like the dollar yen in 2011,
Yeah.
which we scaled into and did really well.
Hmm.
The Monster Fossil play last year as a long short was a really, really good one for our portfolio. Are there any other trades, like from an intraday perspective? Because I guess they're not as prominent. Do you have one or two a day, perhaps?
Yeah, I mean, I don't think
Or
there's no one trade that's my favorite trade, because they're all pretty much the same. You just do them over and over and over again. So there's no, and by the same token, there wouldn't be one trade that's my worst trade either. Okay, but if you talk about a day, I guess you could probably look at Brexit. When we day traded Brexit,
the short pound.
So yeah, exactly. So that was kind of a day trade, if you like.
Yeah, that wasn't strictly according to the strategy, but it was a short-term play.
Yeah, exactly.
In the market for less than a day, and
yeah, exactly.
That stands out as a good trade.
The earthquake in Japan, as from a period of time, so not one particular trade, but
okay, yeah. Okay, fair enough. Same as me. Okay, cool. And do you have a worse trade, or have you ever done something stupid, like averaged in when the price has gone against you and kind of continued, and you just scaled in and then ended up losing big, or
no? So
multiple losses, anything?
Yeah, so I've never been retarded enough to move a stop loss. That's one thing that I'm actually quite proud of. I've never destroyed, an account in that way. Having said that, there have been days when I've just made, stupid trade after stupid trade, and I've been ready to pick up the laptop and throw it out the window.
I've been there when you.
Yeah. So there's been plenty of those trades there, but I wouldn't say that there's one particular trade. It's like a day worth, and I couldn't pick one day either, because they come along every so often. They're not.
Oh, there's not best days. This wouldn't go down to say your best day trading experiences, but there are times where we've been on our way to a meeting and you'll say to me, Nicky, you drive, because you've got your laptop on, and I'll be driving, we're sat in traffic, and then you'll say, close a position, I've just made, percent, and I'm looking and I'll be like, "You made 1%. I have to work my ass off to make a percent or two through analysis and through running a portfolio."
That's because I'm the best. And for those of you that don't remember it, there's a vlog, 4234, vlog 1, 2, no, I think it's vlog 3. But anyway, it's one where we're in the office. Go back and see it and look at it. I am the best, and he admitted to it.
On that day. Okay. Here's another question. Do you have any actionable points you could give a day trader right now?
Okay, so if you are new to day trading, there are a couple of things I would say you need to do. One, don't put all of your capital on the table at once. So don't say I've got, £10,000, £100,000, £1,000 even. That's my total capital. I'm going to day trade all of that right away. Take maybe 10% of it and practice with that 10%.
But would you say go live is important?
Yeah, I think
demo.
Yeah, demo to get the mechanics of a system, but you have to live trade. Even if it's like pennies that you have on the table, you have to live trade.
You need that emotional attachment to kind of learn how it feels to make money and lose money, even if it's small.
Exactly.
Yeah.
Exactly. So that's probably one of my primary ones. Pick an instrument and get to know it intimately as well. Later on, you can branch out and you can look at many different instruments, but just try and get to know one and get good with one to start with, but then everything else will take care of itself from there.
So again, that kind of goes against our longer term portfolio. With our portfolio, we like to broaden out and look for across the board opportunities. When you're day trading, you're saying be specific.
In the beginning. So, we have a couple of people ask that question where, should I look at one particular instrument, which one's the best one to learn? And there isn't a single best one to trade, the DAX maybe. But ultimately, it's just about learning to trade a particular, learning to trade a strategy and getting good with that particular instrument, and then you can branch out from there.
Okay, fair enough. Well, that's the end of the questions. So do
Cool.
you have anything else to add? Or?
No, thank you very much for watching. I hope you all enjoyed this. I hope you all got some good information out of it. And you enjoyed seeing Nicky's pretty face on the camera. It's not here enough, really. But thank you very much for watching. Take care. And,